undoubtedly the biggest talking point at the moment for the global economy, looking at how that might translate into global risks, and then by extension for Africa. So far, a lot of the commentary has been, well, Africa is still commodity dependent, it's a commodity producer, so we really do need to look at the potential global implications of the crisis, and Africa might be impacted through that channel.
Sure.
On the other hand, if we look at African markets, we know that a number of markets have been impacted by the volatility that we see elsewhere. In a risk-averse environment, some investors are choosing to take profits in their Africa trades, others are looking very carefully at the extent of volatility and just monitoring how that progresses.
Yeah. In a word, should we be worried?
Well, Africa is still very much dependent on Europe. Europe is the key trading partner for Africa, notwithstanding the success that the region has seen in building new ties with other developing emerging economies. So yes, of course, if the largest trading partner is going through this kind of volatility, especially given the importance of that bloc as a whole to the world economy, if we do see the transmission to financial markets the world over, there is no way that Africa is not going to be impacted. That said, we do still maintain that longer term, the fundamental impetus behind Africa's growth is domestic. And we don't think necessarily that a more difficult external environment is going to overturn that entirely. Nonetheless, this is something that has to be watched very carefully.
I'm sure you're watching the figures very carefully. Recently, with the IMF coming up and revising their growth numbers for Africa, albeit very, not a big change in terms of their focus. From where you stand, have you had a relook at your numbers? Are you tinkering with some of them? How substantially?
We had been quite bearish on prospects for the euro area for some time, realizing that the big problem was the politics and the ability to get ahead of the problems. So in that respect, there hasn't been any pan-regional downgrade to the forecast. We are, of course, monitoring events very carefully, seeing how that translates into downside economic risks. For individual economies, though, there have been some significant changes. If we look at the evidence of a slowdown, perhaps it is just cyclical, that's creeping through with some of the Nigerian numbers. Kenyan growth most recently disappointing relative to expectations. I think it's undeniable that you have to pay attention to this. And of course, we get the release of South African GDP.
Yeah. Who is surprising, though, on the other side, on the upside? In other words, who's surprising you in terms of their numbers?
Well, there's still something to be said for the fundamental resilience of the consumption economies. Now, on the one hand, we know that there is reason to think that the global environment is not going to be particularly conducive to African growth. On the other, you still have current account deficits in many, many countries that are in double digits or close to double digits as a percentage of GDP. And that suggests there's a lot going on with infrastructure investment. That suggests that there's still a great deal of domestic demand that's driving things.
Yeah, there are some people who are saying Mozambique is going to be one of the star economies of the future. And also, of course, where we are, people are also saying Tanzania, because of all the discoveries that we've seen, the gas in, on the eastern side of Africa, in Mozambique and in Tanzania. What's your view on those two economies, and what sort of numbers can you give us to get a sense of just how important and transforming these discoveries could be?
Sure. Well, interestingly enough, both Mozambique and Tanzania are members of what we at Standard Chartered have called the 7% Club. Those are economies that have already managed to grow close to 7%.
Is this the new BRIC acronym coming from Standard Chartered?
Standard Chartered doesn't need a BRIC acronym. Standard Chartered has not focused on necessarily only those big economies with global relevance that are likely to have a share of 5% of GDP or more. What we're saying is there are individual economies, perhaps small economies, that are no less important simply because of the kind of growth that they've been able to sustain. And both Tanzania and Mozambique have been excellent examples of that. Starting off a weak base, admittedly, but the resources-driven growth that we've seen in Mozambique, increasingly the successes that we're seeing with agriculture in Tanzania, setting up the base for success in the future. Now, when you factor into that the energy-related developments in East Africa, it just adds to the excitement about the region, about the potential growth prospects going forward.
So you've named 2 of the 7. Who are the other 5?
Oh, there are many more. Uganda is one that has sustained that sort of growth rate. Ethiopia, increasingly, if we're looking at the structural reforms that we think are going to be likely, Nigeria will not be very far off. Zambia has had a lot of success in that regard. In fact, when it comes to Africa, the good thing is that we struggle to say who's really going to be exempt from that 7% club.